An interesting market voice. Andrew Holland, CEO at Ambit Investment Advisors, joins us right now on the show. Andrew, good morning. Thanks so much for joining in. How difficult or easy it is right now to advise on the markets? Because as we've seen, the indices, the benchmark indices are not going anywhere. But if you look at specific names, there is a lot of action because of earnings predominantly or because of some specific announcements as well.
Yeah, you've asked a very good question. What to do? We're in that kind of twilight zone where the markets could easily go up 200 points or go down 200 points. I think we're more likely to go down 200 points than we are up, though. We're coming towards the back end of the reporting season. It's been okay. It's been nothing to shout home about. There's been one or two companies here and there which have done well, but by and large it's been a pretty poor performance. So, when we come out of this, then what have we got to look forward to? Globally, we've got rate hikes in the US, looking more likely 50-50 now for a rate hike in September. And we still have the problems coming out of China, and that's being played out in the commodity market. So I still think we're in for a volatile time, and I think China, among my more gloomy kind of thoughts, will have an impact on the global economy. Then I think we could see a very swift risk-off trade. And we're already seeing that in emerging markets. You're getting net outflows in emerging markets week after week. But that could accelerate if China proves to be what we think it is, which is a headwind for global economies. And that would mean that our index would probably head nearer to that 8,000 level than where it is today.
Okay, and what's going to drag the market lower till there, Andrew? Do you think there is going to be some key sectors which are going to pressurize the markets, or is it going to be an across-the-board profit-taking that we'll see?
I don't think there's much, apart from your mid-caps and small caps, in the large caps, there's not really much profit-taking to be made, right? The market year-to-date is flat. So if anything, it's only the individual stocks which have done well. So I would say that it'll be across the board, but particularly the banking sector, I think, will come under pressure again if you have a global sell-off. Because the two things that we're kind of being complacent about, and maybe the RBI governor is kind of hinting at that, is we've got a stable rupee, but let's think about interest rates in the US rising. That means that all dollar-denominated debt is going to rise too. So the rupee will probably depreciate under this. So that's a double whammy. And if China slows down, as we heard from Vedanta a few weeks ago, then they're seeing China just dump steel into the European markets, pushing prices down. So that's going to be a big headwind for our companies as well in terms of commodities, and that's going to again have an impact on the banking sector. So whichever way I look at it, the banking sector is probably the one. Particularly PSU banks are going to take a big hit in that scenario.
But most of the PSU banks, Andrew, either are nearing the book or are way below the book. So some would argue that markets know this problem is coming, and markets are well aware of the problems there, and that's in the price. In markets, it's all about buying what's in the price and what is not in the price.
There's no way it's in the price, Nikhil.
It's not in the price? How much more can they fall?
No. How much can steel prices fall? Let me ask you that question. If you think steel prices are going down by another 10-15%, then you can take that haircut again for the banks. See, I don't think we're just saying that commodity prices falling is good for India, which it is in the longer term. But the headwinds that brings for a Tata Steel with the huge amounts of debt that they have is just enormous. So, I think we're being a little bit complacent about everything's in the price. I don't think anything's priced globally for what's happening in China. China's the second largest economy in the world, and we're just ignoring it. We're watching the stock market for what we think is really happening. Yeah, the bulls will tell you it's up 20% year to date, but commodity prices are telling you there's something wrong with the economy. And that's affecting global economies as well as companies. Just look at the evidence. Korea's sales to China are just collapsing. Audi came and said, forget 2015 sales, let's go back to 2014 targets. Vedanta has said what they said about dumping of steel in Europe. So this is going to have a bigger effect, and we're just starting it. We're just feeling it.
Andrew, okay. So since you're talking about fast-moving vehicles and not fast-moving consumer goods, let me ask you about what are your thoughts there. You raised a very relevant point about what commentary is coming from some of these companies. You know, the eternal argument right now for the last 3 months, at least on our channel, is whether Tata Motors presents an opportunity or whether that opportunity will come in at much lower prices. You know, what does one do with some of these beaten down auto names which are under maybe a temporary period of slowdown?
Right. Well, it depends if you think it's temporary, right? And unfortunately, the transparency from China is very low. So if I think about Tata Motors, the only story in town for Tata Motors was Jaguar and Jaguar China. Now, if China's slowing, which it is, and everyone's giving heavy discounts, and that game is over, that story is over. And unfortunately in India, Tata Motors has still got to get its act together quite considerably. So, it's losing market share everywhere. So, yeah, could I look at the value now and say, yeah, it's looking cheap? That's cheap on the forecast that I'm seeing in the market. I would take a haircut to those profit forecasts, at least 30 to 40% from here. Then I can start looking at a share price which I think is more reasonable.
Okay, so besides Tata Motors, Andrew, whenever that dip in the market comes, what would you go out and buy?
So our views are very, very kind of firm in that we expect the yen to go towards the 140 level. So, in any market fall, the one company I'd be buying in the auto sector would be Maruti. I'd be looking to buy Reliance, and if I'm right in that the banking sector will take quite a sizable fall, I'd be buying back into the banks again. So those are the kind of the major sector we'd look at would be the banking sector, not necessarily the PSU banks, Nikunj. And we would obviously have Reliance and Maruti in those as buying opportunities if markets fall.
Andrew, the other bit or other obvious in the market, at least to our mind in the last 2 or 3 quarters, has been the phenomenal rise in urban consumption. It showed in the urban consumption direct plays. It showed in finance companies which finance some of these urban consumption themes as well, the likes of Bajaj Finance, etc. And there's a clear demarcation out there. Rural is not growing, urban has grown. Do you think this can continue, or do you think there will be a bit of a pause mode here?
I think it'll settle down. I'm not, I've not really focused my mind on the kind of consumption story. The consumption story in India, I think, is a later play for me. I mean, I might be wrong on this, but I'm still sticking to my theme of who supplies India, and that's really played out well for us because, some of the operational gearing you're seeing from companies who supply to whatever industries that is starting to see some traction, is being rewarded with the share price moving a lot higher. So, for example, Dynamatic Technologies, Ramkrishna Forgings, Alstom T&D, ABB are all performing well, and you can see that in their results. So, this is the kind of the kind of stock, kind of where we've identified who's going to be the winner from supplying different sectors of India. So we'll continue with that theme. Consumption is not something I really want to kind of play at the moment.
You take such an isolated bet, Andrew, because according to the governor himself, urban consumption has picked up. If inflation comes down, which it has, more savings means more spending. Consumption is here to stay, and who knows, consumption could make a comeback.
I'm not saying it won't. So, it's like if people are going to buy more cars, I'm okay with them buying more cars. What I've identified is the auto parts suppliers who will, be the first beneficiaries of that pickup because the order books will get fuller than people selling cars. So that's exactly how we played it. So we are on the consumption side, but a different kind of angle in terms of who supplies India. That's all we're doing.
Okay, Andrew. Appreciate these thoughts as well. Some very interesting themes, and thanks so much for taking the time out and joining us today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.